Hello and welcome back to Roguefx. Today we are going over Liquidity Inducement 2.0. This is going to be the volume or series 2 of Rougefx Trading course. If by some reason you are still unfamiliar with, liquidity versus inducement, we do have previous videos on both topics. However, we can definitely cover both of those right now. So first, I would like to help you understand that these liquidity inducements or liquidity and inducement are both going to be found within our universal pattern, right? What is this universal pattern going to look like? It's going to look like a QM or a Quasimodo, right? So I'm going to illustrate our universal pattern being what? A Quasimodo, QM, strong low, strong high, weak low, weak high. So obviously the types of liquidity will be obviously, found within the universal pattern as it, decides to play out in whichever market structure it decides to print, right? As you can see, we have slanted lows. Price might also use this trend line as a type of liquidity, right? So how many people are looking to sell off of this trend? A plethora of opportunity to definitely retest a previous low and continue higher, taking out buy stops as well as early sellers. This also definitely depicts what? A price imbalance, of course, right? So price is going to obviously leave that inducement, rally higher, take out early sellers as well as buy stops, and continue lower for lower pricing. Obviously, continuing this expansion towards lower prices. Another cool thing price likes to do is it likes to leave obvious order blocks, rejection blocks, as well as breaker blocks. So obviously price performed this liquidity grab breaker structure to confirm our overall Quasimodo. But let's just say for whatever reason price decides to stop right here, a bit, a few pips shy of, the overall break of structure phase, retest, leave a overall, in this case, inducement and continue lower. What can this act as? This slight retest can definitely act as a breaker, right? This is going to be a pretty obvious, pretty recognizable breaker from any trading style, right? Whether that be support and resistance, smart money, Wyckoff, Elliott wave. Understand that this breaker is going to look pretty obvious to the average trader, right? What happens after that? Price comes back, takes out internal range liquidity to the left, which happens to be what? The breaker, the rejection block, the order block, and then continue lower, continue the overall expansion towards the lows. Another thing that price usually likes to do, or another type of liquidity price usually likes to display, is an overall 3 candle formation. Price will obviously continue its overall Quasimodo, retest, perform a failure, swing, and take out the whole entirety of the Quasimodo itself. This is just like another phase in the market. Understand it is possible. Understand that, there is pretty much no limits to what the market can do. So just having this in the back of your head, you can understand why you could obviously take this long towards the highs, taking out internal range liquidity being what? 3 candle formation. 1, 2, 3. Obviously depicting liquidity, whether internal or external. We obviously are provided with the raid. And where do we target? The overall lows, as well as, the expansion towards the overall lower pricing. Another thing that price likes to do within these Quasimodos is definitely form the AMD pattern, right? What does that kind of consist of? Well, obviously we have our Quasimodo, which obviously leads into what seems to be a consolidation. As understood in our latest video of the AMD pattern itself, which is, again, it's very much available on our previous videos located in the Secret Gems playlist. Price will obviously form its Quasimodo and then stop prematurely and enter a sort of consolidative or accumulative phase, gradually break out and retest maybe a POI to the left, internal range for liquidity being, obviously this imbalance right here, or this liquidity void if you're obviously on the higher time frames. Price takes out, in this case, internal range liquidity, which happens to be buy side liquidity. At that point, price has all right to continue lower, continue the overall expansion towards the lows. It's honestly pretty simple to understand when you obviously have enough practice, have enough, or you train your eyes well enough. You can definitely pick up on majority of these liquidity inducement traps, or in a case, entry opportunities. And then of course we have weak lows and weak highs. What do these lows and highs consist of? Well, imagine if price, obviously established a Quasimodo, took out liquidity break broke structure, and decided to print a high prematurely, retest. Where is our overall liquidity? It's going to be this high, right? It's going to be a target. Why is that going to be a target? Because did this high break this overall major high? Did this even break a intermediate structural high? No, it didn't. So what does that make this high? It makes it a target. Whether it stops prematurely and mitigates, whether it performs a liquidity grab, whether it completes at 100%, or takes off and rallies higher in general, understand that this high is an overall target. And then obviously we continue the overall expansion towards the lows. Same thing with the inverse. Price prints a liquidity grab, break of structure, retest, prints a premature low. Did this low break this overall low? No, it didn't. So what does that make this low? It makes it a overall target, whether it stops prematurely and mitigates and continues higher, or of course it decided to mitigate the or use the low before it as a liquidity inducement, or maybe even fill it in 100% and use it as an overall liquidity grab. However, in this case, price did create an overall expansion towards the highs, use this overall weak low as a target. It may not have, in this case, of course, if I, stretch it all the way out, it may not have took it out 100%. Maybe it mitigated this POY to the left and continued higher, continued the overall expansion towards the highs. Understand that a lot of the times the first top or the first bottom is generally just going to be a liquidity inducement. It's going to be reason for price to come back up, take out early sellers in this case, or early buyers in this case, and then continue higher. And while the people who have been stopped out prematurely are dazed and definitely confused, the more patient traders, the traders that obviously are waiting for the confirmation, will be in on the right leg, right, or the correct leg that obviously provides the overall expansion towards the lows and the overall expansion towards the highs. Now that we have gone over all or majority of the liquidity inducement, I guess you could say, tools, we can definitely kind of scavenger hunt them within the markets. Obviously, there is a process to this. However, I'm going to obviously find the range, and then what is our job after that? We're going to locate internal range or external range liquidity, and that should give us our overall expansion or correction towards the lows or the highs. I want you guys to understand that it's going to take more than one video, more than one watch through. You're going to have to study. This has taken me well over 5 years to, I want to say 4 years, going on 5 years, and obviously by 2023, maybe September 2023. However, when you understand and the things that you obviously are supposed to know to embody this trader mentality, understand you will have acquired and a skill set that will definitely take care of you for the rest of your life, of course. If you haven't already, hit that like button, subscribe to the channel, because we do post consistently. And of course, it is definitely free. Definitely hit that post notification bell, stay updated on all our videos. Subscription-based membership is definitely starting January 2023. However, the link will be in the description below, as well as to my IG, as well as to my Telegram, Roguefx Trading Journal. As you can see, I have already went ahead and marked up the trading ranges for obviously this bearish market, as well as this slightly bullish market to an overall corrective bearish market. I purposely chose a slight, I don't want to say ridiculous, but it's a bit choppy market so you can understand the overall consistency within an irregular market condition as this is. Understand that no matter what kind of price action or market structure you are receiving at any moment, it is definitely tradable. Whether you pull 21%, whether you pull 3%, understand that as long as you know what you're doing, you will pull a decent return on investment. As you can see, price establishes our liquidity grab breaker structure, which obviously ultimately gives us our strong high. Price corrects down, fails to break this overall low. However, it definitely does take out liquidity towards the left, and then we have an overall breakup structure, which establishes our weak low. As you can see, we have a bit of a choppy corrective behavior on the way down. However, if you understand, obviously, our rules or liquidity in general, you can understand that this is definitely a trend line. And if you stretch this trend line out, what does it give you? It definitely gives you a decent or really a great supply area. It's definitely not a whole, a box or something. However, I do find that these lines work just as well as any demand or supply zone area that obviously more popular within the industry. Moving on to our next range, if you look closely, it's pretty obvious that price has obviously printed a slanted low. However, as you can see, price extended a bit higher. So say if you took this sell, you definitely be out of the market, especially using a really tight stop. However, if you look above that, right above that internal range liquidity, you can definitely see that we have a what? As you can see, we have a price rebalancing, right? And yes, of course, it obviously extended above our overall demand, or I'm sorry, supply zone. However, what you need to understand as well as is with patience and obviously experience and time, you will understand that correcting or catching these direct entries, which it would be this bullish rejection block, is honestly pointless, right? Because obviously, if you wait for your confirmation, you get a retest, and it gives you a bearish order block to a certain extent, and at that point, you could definitely see a decent risk reward. And this is on the hour time frame, right? So imagine 1, 2, 3, 4 hours of straight profit, and you understand where your overall bias is based off of what? Liquidity. What's to the left down here? We have a slanted low. That's guaranteed profit. Moving on to our next range. Price provides us with our strong high, weak low, and then enters us a sort of accumulative, manipulative, and distributive phase, and then rallies higher, and obviously takes out internal range liquidity. Being what? Well, obviously we definitely have this 3 candle formation. However, price definitely ran through that. So if you would have took this, I guess you would say supply zone as a POI, you definitely be stopped out. Why? Because above that, above this liquidity to an extent liquidity, we definitely have a price rebalancing, which would be what? Well, this unmitigated POI. It would be pretty simple or fairly simple, and obviously we would respect our supply area, and yeah, we would get a pretty decent wick entry, or honestly a really nice sniper entry. But I mean, I've seen these so many times, it kind of really, it's just an entry, right? Because apparently, or definitely, you do something so many times, it becomes second nature. And then at that point, it's just becomes something that you do. It doesn't necessarily excite you, because, I mean, it's exciting. It's most definitely exciting. But like I said, if it's something that you do and it's a part of your routine, it kind of knocks the whole entire think of it like this. Yes, it's graceful to catch these sniper entries, but when you've already mastered the technique to a certain extent, it just becomes something you do. Moving on to our next range, price took out liquidity, broke structure, establishing our strong high. Obviously, we had that same, I guess you could say, price action towards the lows, establishing our weak low. I know what you may be saying, Jody FX. What's going on? Where's the internal range liquidity? All I see is choppy pattern behavior. It's kind of confusing. Where do I get in? Understand that when you are identifying price action, you need to a certain extent, understand which type of liquidity you are actually looking at, right? And I'm not saying locating, because obviously, if you're looking for one specific type of liquidity, you can miss dang there 3 more that's on the screen in front of you, right? However, where we already definitely talked about obvious order blocks as well as rejection blocks as well as breaker blocks, we definitely discussed that. And if I take my fib, go backwards, it gives us a fair value. It gives us a opportunity. It gives us a premium pricing. It gives us to an extent, 3 candle formation, right? At that point, we have a lower time frame Quasimodo. We have our liquidity grab, break of structure, retest, a plethora of opportunity to enter, whether that be a direct entry, whether that be a confirmation entry over these slanted highs, whether that be a retest of this unmitigated wick, a plethora of opportunity. This is, at this point, is creating opportunity for yourself. This is ultimate mastery. Price performs a choke, retest, liquidity grab, continues lower. In this case, I want to say at least 5 different opportunities just to enter these markets and catch well over 2 expansions toward the lows. Moving on to a bit of a bullish market. We have a strong low, weak high being established. No, it does not have to take out a overall major high. Intermediate highs are definitely enough. As you can see, we ended up creating a choke as well as a break of structure. Not by much, but it still counts. We retest, take out internal range liquidity, enter a bit of a consolidative behavior, maybe power of 3, and continue higher. This can definitely act as a pretty obvious rejection block. It's going to be bullish. We take that towards obviously stretch it out. It'll give us a decent opportunity for a long entry within like a demand zone, of course. You can definitely look at it like that. Or, and this is the flexibility that this trading strategy actually provides, right? Because yes, you can say, oh, this is the demand zone of a pretty obvious order block. And yes, that is to an extent true, as well as this imbalance. However, we definitely have what? We have a price imbalance, right? And in this case, price did what? It rebalanced. As you can see right here. But obviously, if you are familiar with your Fibo extension, you can definitely find a decent discounted price as well as fair value. And if you really want to just be careful, I mean, that would just be a smooth discounted price right here. It would get you in, of course. It wouldn't be like a near miss or anything, as well as you can take advantage of a smooth expansion from this overall impulse, right? Moving on to the next trading range, price, established its strong low, weak high. As you can see, this is another one of those that didn't necessarily take out, or I guess you could say failed to break the high previously before it. However, it's fine. It doesn't necessarily mean price is going to continue bearish. No, of course not. Especially when we have a pretty obvious bullish rejection block towards the left. However, understand that we did take out internal range liquidity being these slanted lows, as well as retesting what? Yes, we retested a bullish breaker, but if you look at it in more of a grander scale, you can think of it like this. This is our protected strong low now, right? Because we had a break of structure. We also had another break of structure, which would mean what? Both of these lows are already protected. So this means that this low would be the newest protected low. And what does price do? Retest, continues higher. In any case, use this demand zone or unmitigated wick as a demand area. It's pretty simple. It's as simple as it can pretty much be for right now, especially when we're talking about internal range liquidity, right? Back on the bearish side of the market, price performed established our strong high, weak low, retest, take out what? Internal range liquidity, right? Which happens to be what? Well, in this case, this is going to be a inducement, right? Price left a footprint. Price left a weak high, continued lower, and retested and took out in liquidity inducement. It just acted as a liquidity. What else can we understand? We can definitely understand this price rebalancing, right? So think of this unmitigated wick as a breaker, right? And then obviously we had a liquidity grab, break of structure retest, and this would be our retest of the unmitigated wick before that, continue lower. Plethora of opportunity. As you can see, we have a strong high, weak low. Price retest fails to break this overall low, giving us what? Slanted lows to look forward to in the future. Retest. What did it retest exactly, right? As you can see, price left off, especially when it came to this strong high, left off with what? A pretty decent, I guess you can say, rejection block that's bearish. Now, when in these cases, understand that if we have a pretty obvious rejection block, and this one would be kind of crazy because to an extent, it took out both buyers and sellers, which overall would, insinuate it being an overall order block on the higher time frame, you can see or you can understand that the structural low right under it acts as what? Liquidity. Whether, obviously it'd be the tip. A lot of times it's going to be the tip. In this case, it wasn't. It was pretty much a price rebalancing, but so small that, it's relevant. So, of course, you can definitely take that entry as well. As you can see, the precision is absolutely ridiculous. Take this all the way down to the lows, continuing this overall expansion towards lower pricing. And last but not least, price establishes our strong low, overall weak high. And this is crazy because this is actually in a bearish market. But this is understanding that price can literally do whatever it wants. As long as your rules meet, you will be, or I don't want to say you will be profitable. However, you will have a higher chance of being profitable or consistent if your rules meet. And obviously, you have this mastered skill. So price, obviously, we have a strong low, weak high. Price retest, fails, takes out, obviously. In this case, it would mitigate the unmitigated wick to the left and continue lower. So at this point, you can see another opportunity or another example of price establishing a strong low and using the low above it as what? Internal range liquidity. Look how precise, look how absolutely precise this entry would be. And then obviously we have what? Above it, we have liquidity in a trend line. Pretty smooth. You stretch that all the way out, what do we have? In this case, it would be a near miss. But that's fine because it's just an obstacle. What's in front of this, what's below that trend line? Unmitigated wick. It's an obstacle. So say you see price failing to actually reach up here, you can definitely locate what's underneath would be what? Unmitigated wick. It's pretty simple. It's literally just adjusting, adapting to price, adapting to market behavior. And that's another thing that, people, shy away from is price is going to do whatever it wants. Price is going to react to whatever resistance, whatever support it wants. Our job is to adapt and be grateful for what we do receive within these markets because at the end of the day, it is just opportunity. And the more you know, the more opportunity is presented to you. And of course, this would lead to one of those ping pong sequences. It's honestly very skillful to know these things and to have this in the back of your mind. This has been Liquidity Inducements. I hope you guys enjoyed this video. I hope it wasn't too confusing. However, I did have to take out a lot of the process, the actual process, so you can understand where, when, how these liquidity inducements do arise in the market and how you can take advantage of them. A lot of people were very much confused within, Roguefx Trading course, liquidity inducement. In this case, volume 1. However, you need to understand that these concepts as a whole work together. There is no holy grail. However, there is a proper way to trade, and I am definitely teaching you that at the moment. So again, your patience is very much appreciated. If you do want to work with me, if you would like me to mentor you, again, definitely hit that link in the description below. Gain access to my subscription-based membership. It's definitely going to be active January 2023. And honestly, I might start early. It really just depends on, obviously, the enthusiasm of our members, of course. I am deciding to take on low-ticket clients. However, it's going to be a bit of a basic, I guess you can say, plan. They will pretty much only have access to one-on-ones that, of course, will be paid for. Of course, nothing in this life is free. However, if you do plan on taking me on as a mentor, going quote-unquote rogue, understand that it's going to come with a lot more. We have fairly cheap one-on-one calls. As you can see, our trading content is definitely free and available to you on YouTube. With the Roguefx membership, you definitely have access to weekly Zoom calls as well as lessons in psychology, risk management, a deeper understanding within the education or educational side of Forex, as well as access to a growing community of traders that obviously are committed, dedicated, and are serious about, their trading journeys and acquiring profitability at the next level, right? So they're not necessarily here to play games. They're here to definitely study charts and hone their skill to their absolute best ability. Again, if you are a low-ticket client, understand that you will only definitely have access to the trading content on YouTube as well as one-on-one calls that will be a bit more expensive. However, not too expensive that obviously y'all definitely can't take advantage. However, understand that my full attention will definitely be on my rogue members, my tribe, the people that obviously want to see me win, as well as me wanting to see them grow as individuals. Yes, the basic plan will be a lot cheaper. However, the rogue members would definitely not regret taking me on as a member, or I'm sorry, a mentor via the subscription based membership. I appreciate all you guys for tuning in. I very much do hope this made sense. If you do have any questions, definitely leave them down in the comment section below. Until next time on Jody FX, y'all have a good night.